The world watched in astonishment this week as U.S. President Donald Trump threatened China with a new 50% tariff on its goods. This latest salvo in the ongoing trade war sent shockwaves through global markets. Investors are worried. Businesses are uncertain. The future of global trade hangs in the balance. This new threat comes on top of existing tariffs. In March, the U.S. imposed a 20% tariff on certain Chinese goods. Then, just last week, Trump announced a 34% tariff as part of his Liberation Day policy. This policy aims to reduce the U.S. trade deficit and address what Trump calls unfair trade practices by other countries. The proposed 50% tariff, if implemented, would be a significant escalation of the trade war. It would impact a wide range of Chinese products, making them much more expensive for American consumers. This could lead to higher prices, reduced consumer spending, and slower economic growth. The situation is fluid and unpredictable. Both sides have much to lose. The stakes are high and the world is watching nervously as the drama unfolds. The current trade tensions did not erupt overnight. They are the culmination of a series of actions and reactions by both the U.S. and China. Understanding this timeline is crucial to grasping the complexities of the situation. It all began in March when the Trump administration imposed a 20% tariff on certain Chinese imports. This initial move was met with immediate retaliation from China. Beijing imposed tariffs of its own on a range of U.S. goods. Then came Trump's Liberation Day announcement last Wednesday. He declared a 34% tariff on Chinese goods, citing the need to protect American jobs and intellectual property. China responded within 48 hours with retaliatory tariffs of its own, also set at 34%. The situation escalated dramatically on Monday. Trump, seemingly angered by China's response, threatened the new 50% tariff. This latest threat has sent global markets into a tailspin. It has also raised serious concerns about a full-blown trade war between the world's two largest economies. The back-and-forth tariff battle is a dangerous game. Each round of tariffs provokes a counter-reaction, escalating the conflict and pushing the two economic giants closer to the brink. China has not taken Trump's tariff threats lying down. Beijing has condemned the U.S. actions, calling them unilateralism, protectionism, and economic bullying. Chinese officials have vowed to defend their country's interests. They have made it clear that they will not be bullied into submission. China's response has been measured but firm. They have matched U.S. tariffs tit for tat, targeting key American exports like soybeans and automobiles. This strategic retaliation is designed to inflict maximum economic pain on U.S. industries that are important to Trump's political base. Beyond tariffs, China has other economic weapons at its disposal. It could devalue its currency, making its exports cheaper and U.S. goods more expensive. China could also leverage its vast holdings of U.S. Treasury bonds, potentially destabilizing U.S. financial markets. While China prefers to avoid a trade war, it is prepared to fight back. Beijing sees Trump's actions as an attempt to contain China's rise and is determined to resist any efforts to stifle its economic growth. The coming weeks will reveal whether China chooses to escalate the situation further. At the heart of this trade war is Trump's Liberation Day policy. This doctrine, announced last week, represents a significant shift in U.S. trade policy. It marks a departure from decades of free trade orthodoxy and signals a more confrontational approach to international trade. The core principle of Liberation Day is economic nationalism. Trump believes that the U.S. has been taken advantage of in trade deals for too long. He wants to renegotiate these deals to get what he sees as fairer terms for American businesses and workers. Liberation Day, according to Trump, is about putting America first. He argues that reducing the trade deficit and bringing back manufacturing jobs is essential to restoring American economic strength. He believes that tariffs are a necessary tool to achieve these goals. However, critics argue that Liberation Day is a reckless gamble. They warn that tariffs will harm American consumers and businesses by raising prices and disrupting supply chains. They fear that Trump's aggressive tactics could spark a global trade war that would damage the global economy. The Liberation Day doctrine is a radical departure from the past. It reflects Trump's deep skepticism of globalization and his belief that the U.S. must prioritize its own economic interests, even if it means risking a trade war. Section 5, Global Markets Reel. The escalating trade tensions between the U.S. and China have sent shockwaves through global markets. Investors are worried. Businesses are uncertain. The prospect of a full-blown trade war has injected a significant degree of volatility and fear into the global economy. Asian markets were hit particularly hard. Hong Kong's Hang Seng Index experienced its largest single-day fall since 1997, plummeting over 13%. Other major Asian markets, including Tokyo and Shanghai, also suffered significant losses. European markets did not fare much better. Major indices across Europe closed down over 4% on Monday. The uncertainty surrounding the trade war has made investors hesitant to put their money at risk. The U.S. stock market also opened sharply lower on Tuesday. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite all experienced significant declines. The technology sector, which is heavily reliant on Chinese manufacturing, was hit especially hard. The turmoil in global markets reflects the deep anxiety about the future of the global economy. A trade war between the U.S. and China would have far-reaching consequences, disrupting global supply chains and potentially leading to a global recession. The trade war is not just confined to the United States and China. It has also ensnared other key U.S. allies, including Israel. As part of his Liberation Day policy, Trump has threatened to impose a 17% tariff on Israeli goods if Israel does not agree to eliminate its trade surplus with the United States. This move has put Israeli Prime Minister Benjamin Netanyahu in a difficult position. On one hand, he wants to maintain strong relations with the United States, Israel's closest ally. On the other hand, he does not want to compromise Israeli economic interests. Netanyahu has said that he is committed to eliminating the trade imbalance with the United States and removing trade barriers. However, it remains to be seen whether he will be willing to make the concessions that Trump is demanding. The situation is further complicated by the fact that Israel is currently in the midst of a contentious election campaign. Netanyahu's political opponents have accused him of caving to U.S. pressure and jeopardizing Israeli jobs. The trade dispute with Israel highlights the complexities and potential pitfalls of Trump's Liberation Day policy. It remains to be seen how this dispute will be resolved and what impact it will have on the U.S.-Israel relationship. Like Israel, Japan has also found itself caught in the crosshairs of Trump's trade offensive. The U.S. president has repeatedly criticized Japan for its trade surplus with the United States, particularly in the automotive sector. He has threatened to impose tariffs on Japanese cars if Japan does not agree to reduce its trade surplus. In response, Japan has sent a negotiating team to Washington to discuss the trade issue. Tokyo is eager to avoid a trade war with the United States, which is one of its most important trading partners. However, Japan is also reluctant to make concessions that it perceives as unfair or detrimental to its own economic interests. The negotiations between the United States and Japan are expected to be difficult. Trump has taken a hard line on trade, and he is likely to demand significant concessions from Japan. Japan, for its part, is likely to resist any attempts to force it into a deal that it sees as unfavorable. The outcome of the U.S.-Japan trade talks will have significant implications for the global automotive industry. Japan is a major car exporter, and tariffs on Japanese cars would disrupt global supply chains and likely lead to higher prices for consumers. The trade war has exposed divisions within Europe. European Commission President Ursula von der Leyen offered the U.S. a zero-for-zero tariff deal. She warned the EU is prepared to retaliate if the U.S. imposes tariffs. Trump accused the EU of harming the U.S. in trade. He threatened tariffs on European cars, sparking fears of a trade war. The EU is divided on how to respond. Germany wants to avoid a trade war. France believes the EU should stand up to Trump. The EU's response will impact the future of the transatlantic relationship. The escalating trade war launched by the Trump administration marks a turning point in the global economy. It signals the end of globalization and the rise of economic nationalism. Countries will prioritize their own economic interests over global cooperation. Tariffs and protectionist measures will become more common. This could spark a global trade war and disrupt supply chains. Higher prices and slower economic growth may follow. The rules-based international order is at risk. A more chaotic global trading system could emerge. The trade war is a symptom of this deeper shift. The global economy will never be the same.